Good morning. Welcome to Options Center. It's Thursday, August 1st. First of the month, you guys. 2024. Welcome, everybody. If you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. We are going to go through SPY and multiple time frames, and we're going to really focus in on the 65 because it's a very volatile time right now with the VIX being elevated, and we're looking at where the market might go from here. And I do think that SPY has a good bottom in, and our risk is the Qs dragging the market down much lower to hit its lower target, if it even gets there. So things have changed up just slightly to where I think if the Qs make a new low, I think SPY makes a new low. I'll go through all those and even chime in on IWM, what to look for on the lower time frames. So I'm doing this video intraday at 11:30 a.m. Eastern Standard Time. If you're interested in getting these live, or I should say at intraday, then consider becoming a supporter, 99 cents. And if not, you'll get this at 4 p.m. with the public. Okay. Let's dive into it. We have SPY on the monthly time frame, 2000 top, 21 top. We're forming a top here now. I do think we're going to form two sort of candles here. I don't know what they're going to look like. Clearly, this is a brand new candle today. We're rejecting a little bit, but in the lower time frames, I still feel that we're going to test the highs again, if not eke out a new high here before reversing. So the first half of the month, maybe we're bullish, and then second half bearish. And it doesn't take long to reverse a bear move. So, you know, it could be 3/4 of the month being bullish, and in the last week, you know, just terrorizing everybody. So we'll see here. We're in a bullish posture. We're above the 8 EMA. That's our momentum indicator, and the trend is still up. So it'd still be healthy for price to come all the way back down here to test the 20-month moving average. Let's go down to the weekly. On the weekly time frame, we're taking a look at a very similar thing here. We rejected off the top. We're holding right on that 8 EMA. So that's a first clue that with this week, we might have a doji, might have some sort of the same thing here happening today, and maybe we just push for that new high for here. We're in a good position still, as long as we hold this 8 EMA, and then the 20 is still the trend below us. Trend is still up. So momentum, we still have a little bit of momentum, and I think that's wearing out to the downside. So I do think we'll grind. It won't be pretty, but I think we'll grind to the upside. And then later on in the future, I think we'll be testing the bottom of these channels, kind of going right with that 50-week moving average. Okay, looking at our targets that we hit, and I think we're dancing around it. Wrong one. Weekly. So we had the 21 into 22 retracement, and our correction, and then our retracement from that correction, we hit our targets at 127.2. That's a major target, and the 120 or 162. And so we hit that target once, dance around it for 2 weeks, and I do think that we retest this area up top here. Now we have time relationships. We already had some come in last week, and we're looking at, or this week, excuse me. So I do presume we have a bottom for this week, and we're looking for the end of maybe the beginning of September here, 9/1, to be the next one. Now I might have to enter in. We have a huge bottom. I don't know if I'm going to enter in another time relationship for this top here, because I don't really think it is the top. But when we do confirm that it's a top, I'll enter another time relationship that will add on to these clusters here. So our next one for the weekly time frame is 9/1, so we won't have to mention that too many more times. Let's go to the daily. for traditional technical analysis, we're filling out this wedge here. We held the wedge bottom, and now we're coming back to test lower areas. Now, this support, I was looking for this support to hold, so maybe we go back down to test the trend line. But as long as we're above the trend line, we're still bullish on SPY. We're at the 8 EMA. We'll see where we end today. And we have the 50 moving average right below us here. So we're rejecting off the 20. And when we look at the Qs, I'll show you exactly why I think, this possibly could break, if the Qs break down as well. So let's look at some time ratios, Fibonacci's. Here we are. So we're right at support again. We're right at this 50. It played great resistance these 4 days here. 1, 2, 3, 4 days. Great resistance. We know that this is a good level. So we'll see how this ends up. Nothing much more to show here. We hit that 162. Actually had a closing day above it and then gap down back below it as a rejection. So this is not, again, it's not going to be pretty. I do think this is part of a first wave up or the end of a first wave up. And I'll show you on the lower time frames. So our next time ratio, this coincides with the relationship. It is a ratio. It is a Fibonacci ratio, time ratio. But this time relationship is 8.5, and that coincides with our 65-minute chart. So let's go ahead and just jump down there, and then we'll go around the horn and kind of explain what I think might be happening with the market in the near future. So here's the traditional technical analysis. We have a trend line here that price is sort of bouncing off of so far, and I did mention this, that these diagonal trend lines are getting kind of shaky at this point because the trend is getting a lot weaker to the upside. So can this break and still get our new high? Absolutely. Do I think that's going to happen? I don't. I now think that the Qs and SPY have a low. But if the Qs want to keep dragging price downward, it's fine, because I have almost a split play going on between long SPY in my options account, long SPY and short Qs. So really just a pairs type trade. And at this point from this point of view, we have our downtrend line. We broke out from it, and it looks like we're just back testing. And again, we have this huge amount of volume here. So does that stop price action? We'll see. So far, it's still dripping to the downside. Not looking good for the bulls at the moment. But again, it really looks like a back test. We're pretty bearish candles today. So here's two things. We have this price relationship with time and price relationship going into 8.6. So does price drag to the downside into next Tuesday or Wednesday? Quite possibly. Or do we start to get a move to the upside and we look for some sort of top there? Here is what I'm projecting. We already had our move here. So I was projecting that we got up to this confluence here, so we could take off these. We nailed that top there. Take off all those, clear this up a bit. So we had a 62% retracement, and we knew that bears would come in here. There's a lot of people that are calling that this is a 1-2 setup, and then we should go much lower, or at least an A, B, C to where it could go lower. And that's our risk. I don't think this is a 1-2, but our risk is to the downside. and I'll put this in here, that price continues lower to test, and then I'll show you where I think if it does continue going lower, we have great support here at the 531, and then even better at the 524. So I would say 531 going into 85, 86 cluster. That would be more of our risk range if price gets back below some of these retracements. So I have the 50%. Now I'm marking from the bottom of this move to the top of this move as either a 1 going into a wave 2 into this 50%, 60% zone, and it can get even deeper. I can put the 786 on there, and that will probably coincide right with the let me see, I'll put it in there. That will probably coincide with the trend line. If we look at the traditional board, the trend line right here, if we come back all the way back here, let's say about 542, that's, yeah, about a little bit under 541. So maybe it spikes through to this 786 here. It could be a pretty deep move. And what I think is going to happen is this is a 1, 2, or simply a larger A into a B, and then you get the C for the move up into that be a wave 1. That would be more like the 2021 top, where we had weeks, like 5 weeks of consolidation before actually getting a brand new high and going lower. The 1 into 2 was really big move to the upside, and then a really big move to test the bottoms for your 1, 2, and then an extreme wave 3 that tested to the top again, consolidated for a couple days, and eked out maybe 1 or 2 days to the upside before actually falling to new lows. So either way, this could be a 1, 2, 3, and going into employment situation. So that's really risky, you guys. Make sure you have your hedges on. With employment situation, could be a big mover. It's a volatile week with FOMC, and so this could be just a simple correction here going into overnight at 8:30 in Eastern Standard Time in the morning, and then we could have a free Friday, and that would be I can move these over now because price is moving so fast. We have 8-1, maybe we have a bottom here in 8-1, and then we get a big move to the upside into our cluster here. That's, you have 8-5 here and 8-7, it looks like. And then for the downside risk, make sure you have your put protection. I'll just make those equal there. And then going into that same cluster, if price continues to go down, and I'll show you exactly what I'm looking at. I'm already long the futures, so I'm actually underwater here a couple points on the micro futures. We'll see how the 62% holds. Let's go over to the Qs so we can kind of compare. The Qs are the risk. It's the tail that wags the dog. That's what I was talking about these last few days or so. We have good support that we're coming into right now if price wants to hold. But again, if this is some sort of, we might get some bounces in between, but if this is some sort of ending diagonal or impulse move, this is our risk all the way down here to the 446, 447 area. Great support, wedge bottom, and then like I said, it's likely because SPY and QQQ are almost equal at this point. You know, they had a new low here in the Qs, but if the Qs come all the way down here, it's just likely that SPY is going to make a new low. All right. And if that happens, if SPY makes a new low, we're going to start looking at this just a little bit different. All right. We'll be looking at this as an A, a B, and a C. And then after that move, then we can start making our count to the upside, starting off with a wave 1. All right, so we'll have to take this wave 1 and start over our count after that. So that's the risk we're looking at. And this was, this was our primary move in the beginning to look at. But I thought the Qs would have been much lower at this point, much weaker, and SPY would make a higher low while the Qs made a lower low. Okay, so I'm kind of saying, hey, maybe we reverse off of here, and it's going to be up to tomorrow. We'll probably have a direction tomorrow, and whatever happens tomorrow, if we get a big up day or big down day, just respect the fact that Monday is probably going to be a follow through from that. And then we'll get if we're down here going into Monday and Tuesday, we'll be looking for longs. Okay. And if we're up here, big days on Friday, of course, into Monday, and then turn around Tuesday, into those time relationships I was talking about, we'll take off our calls and we'll go short again. All right. So this has given us a lot of trade action here, but I'm not going to give you exactly what you want. All right. We're pretty much neutral. So this is kind of our pairs trade. We have longs on SPY and we're short on Qs, and then out of the money on those Qs, because I do think we have a likely case of actually heading to the upside here. All right. So this count that we have here says that price is going to go lower. If we do not, if we have a low in, because we made a new low here, and SPY did not, then we draw the wave 4 was that very shallow wave 4 from that 23.6 right here. Rejected down there, got a wave 5. And this initial move here would be an A, B, and possible C zigzag, because everything that happens now with the Qs is going to be corrective, in my opinion, because I don't think the Qs are going to make a new high. I think they're going to be weaker. They're going to lead the market to the downside. I do think it's going to be a nice deep retracement while SPY makes a new high. So after this could be a zigzag. I do see a 1, 2, 3, 4, 5 wave move. And this would be an A. We would be getting a B into here. And then we look for a C. If we get a big day tomorrow, that would be a zigzag. And it would look very similar to what's happening in SPY. So now this is our primary scenario. Getting a low into there. Yeah, I'll just draw this up here. And then that would be our primary scenario. And then after maybe a little bounce and going into tomorrow, this would be our going into the 447. And I don't have the time relationships in there, but you know that it's 8.5 to 8.7, kind of that cluster. So this would be our secondary scenario here. So that's where our hedges are. I don't have the puts in expiration all the way down here. I have them closer to the bottom here because we don't know if it's going to actually reach that target. It might just come down and eke out just a little bit more of a low and then spike back out of it. So that's what you got to be careful of when you do your out of the money. You don't put it at your target. you still have it conservative. Excuse me. We're getting a little doji there. We're at the 62% retracement on SPY. Here, let's see where we're at on a retracement for the Qs. So you take the bottom of that A wave, possible A wave, to the top of the A wave, and it's not going to be exact. We're right about at that 62% retracement here too, so we might eke out another little move down. And let's clear that up for the future. We'll leave the 50-60 on and take out all these curves. Okay, I like that we are running through this together. So in this scenario, the primary being the turquoise, we have a bottom here. We have a 5, 3, looking into that 62% retracement, 5. Okay, if the market's very negative tomorrow, you'll be able to tell. It won't be. You'll probably gap down or gap up in the morning and gap and go. So this will likely gap and go down or up into these scenarios, and you'll be able to take off some of your hedges. And at the extremes, then you start trading the other way around. So we have to be careful though, because this wave C, if this is an A, B, C, it doesn't have to be equal 100%. So this can go much further and close our gap even before we get our counter trend move to the downside. All right, which we'll just have to look at that as we go. I'll do another video tomorrow. Now, sorry I spent so much time. It's just very important. That's what I have to do every single day, is try to figure out where the market's going according to what the other indices are doing, where the pressure is coming from. We clearly had a fake break here on IWM. Luckily, it took off a few contracts. They were big contracts. Took a few off, and as we ascended, and then broke down today, giving us a fake break. Now, what happened here today? Let's and maybe I should have been more aware of this, paying attention, but I did look back at it today, like, why is it rejecting off in fake breaking? Because we reached that 786, but then we finished off this move here, this structure. It was a 3-wave structure, so we should have known. This is hindsight, right? So I should have known that that structure was not complete. You had some sort of probably ending diagonal here to get a new high, but still a spike into the 786. That's kind of what I'm thinking the market's doing right now in a bigger picture. And then after that rejection, huge move to the downside. So even if the market is, let's say SPY still does hold a higher low and the Qs go lower, then IWM, I think the top is in IWM, but probably have a huge retracement. And if the small caps are holding the market up while the Qs continue much lower, that could kind of keep SPY at check, and they'll have to that will have to coincide with DIA. So if you get retracements here, or if this continues to the upside, because all it's doing is back testing that same trend line. So this looks like it's triangulating. If this holds the market up and we hold the market up, but the Qs are weak, then that same scenario we talked about the last few days could hold out, where SPY is relatively stronger, is going to go up higher. And so that works out perfect for our pairs trade as well. So it could be a good hedge play that the Qs are in puts and the SPY calls, or a great pairs trade where SPY is going to hold up because of the other indices, and the Qs are going to go lower and give us some premium in those puts. So that's why we're doing that. It's kind of a win-win. The probability is pretty good to get that make out on that trade. All right, and lastly, the VIX. The VIX is holding up well. and I don't even need to look at it on the daily. This is what we're looking at. And so here was our risk to the upside here. We're breaking out of a flag. So at the time that I started this video, we were holding here at options expected move. We were at resistance. So that's when I put on my trade for the upside on SPY, because our risk is that VIX gets rejected from here. Now it's above there and back testing now, holding at that options expected move. So it's going to hold us in limbo. Either it fake breaks and heads lower, or it continues higher, maybe peaks above and then wicks back down. And again, what will that will signify that the market's going lower, and the Qs are probably dragging it lower. So we'll keep a good eye on this VIX. So far, it looks positive. All right, so it looks like it wants to break out from a flag, and if so, we could eke out a new high, and that would probably mark our low going into Monday and Tuesday if this continues higher. And then I suspect going into Tuesday that VIX has a big drop and that we start moving the other way around. That's what I got for you guys. Hope this helps. Have a wonderful day.